Have you thought about how to prepare yourself for the next market downturn? We're going to talk about that on today's episode of Friends Talk Financial Planning. Hi, I'm John Shear. I run a fee-only financial planning practice in Middleton, Wisconsin.
And I'm Bridget Sullivan Mermel, and I've got a fee only financial planning practice in Chicago, Illinois. John, I really enjoy listening to you talk about how you talk to clients about what you call the lifeboat drill. Like, so you are actively talking with people about, okay, what do we do if we need the lifeboats? So why don't you talk that through?
Yeah, sure. I relate it to being you're going on a cruise ship, and at the beginning of any journey, they have a lifeboat drill, right? Everybody goes out and you say, okay, get in your positions, and here's the boat you get in if we get into trouble. So, probably nothing's going to happen, but then we've got a plan in case it does, right? And so I relate that to investing, just as you said, Bridget, but although in investing, it's not if the market's going to go down, it's when it's going to go down. We just don't know when. And what are we going to do when that happens? And think about it. I think the really important thing is to think about it today, right? Right now, the market's doing well. By the time the market goes down, it's like trying to figure out your parachute after you've jumped out of the plane. Like, let's think about that beforehand so we know what to do when we get there. And so rather than waiting until we have bad times in the market, this is the time to be thinking about how do I feel about this? What things would I do? And one of the things today I think is a great example for people is that a year ago, right, COVID came, everything shut down in the market. Just, you look at some of those charts, and 6 weeks it was down 30% or something crazy.
Right.
But then it bounced back again, right? And now we're back at or above those levels. And so it was sort of a weird thing because it was so quick. It was, like a roll, really scary, and then it came back up, and now we're on even ground. And so I encourage clients, I encourage viewers to think about today. What would you be feeling like today if the market had gone down last year, 20, 30%, and it was still down? Your portfolio was down a third from where it was at the beginning of 2020, right? And that's what we had in 2007, 2008, 2009. It was 18 months, pushing 2 years, maybe 2.5 years, where the market went down and it stayed down.
Right.
And think about how we today, right? Where, okay, you kind of feel like, maybe it's fine, maybe it's going to come down, who knows? But what we have today, I just read the other day that we have 8.5 million less jobs in America today than we did a year ago, right? Of course, there's more money been spent on the COVID relief bills than was spent in all of World War II. We're in a lot of money going out the door. Maybe taxes are going to go up. We'll kind of see, maybe interest rates, and we've got a lot of variability with what's going on. And the market's doing okay, so maybe we don't feel quite so bad. But what if your investments were down a third? Take a look at what that number is. Take a look at your statements and say, take a third off of that, right? Cut it in half and then go a little bit higher and say, okay, if all of our investments were way down from where they were a year ago, and we've got those other things, boy, maybe you might have a different feel. And what we sign up for as investors is not, oh yeah, the market's going, my portfolio is going to go down 25% and it comes right back up. It's, yeah, it goes down 25% and it might last a year or 2 years or 3 years. And how do you feel if, next time it goes down, it stays down for 2 years and you still have unemployment that's high and all these other things? Are you okay with that? Because that's what we're signing up for. And it helps at a minimum to think of, oh yeah, that's right. That's what we're signing up for. And I'm asking folks now to say, if that feels uncomfortable to you, today is the time to make a change, not based on what we think is going to happen in the future, not based on predictions, but the idea that it is going to go down at some point. If it stays down and that doesn't work for me, now is the time to take action before something happens. So that's how I explain it to people.
Right. And I think that getting emotionally prepared for it, like that this is what's normal. Like, when you get married, people don't say it's easy the whole time.
Right.
Like, okay, there's going to be some downtimes. But you were talking about a particular client of yours that I thought was a very good example of thinking this through ahead of time. Why don't you tell us what happened with that?
Yeah, sure. It was back in 2008 sometime, I think it was. And that was when the market had gone down and it went down some more and it stayed down, it went down some more. And, it was kind of a dicey time. And I remember she had called in October or so and said, geez, we need to talk. My portfolio was way down. And I knew this client pretty well. We've been around for a long time. So I said to her, well, geez, I didn't realize that, is it? And she got, kind of stuttered. Well, what, aren't you watching this one? And I said, well, since when? Is that? And she said, well, at the beginning of the year, my statement says this, and now it's down 25%. And I said, oh, geez, I'm sorry. I thought we were talking about your long-term money, because I looked, and 5 years ago you were here, and now you're here, even after that downturn, right? And she said, well, geez, John, that's not what I meant. But the reality is, like, listen, we sort of think like at the end of the year, we see our statement, and whether it's a 401k or other things, we kind of feel like, well, that's like a bank account. Now I've got this much money. Now I've got this much. And the reality is, hey, those fluctuations, you look at a 5-year time horizon, and where was your money today versus 5 years ago? Even last year when it was down so bad, compared to 5 years earlier, you go, oh, it's a better view on things. And
right.
Again, you just said, Bridget, as I think about it, it's like being prepared. It's not, oh my gosh, the market goes down, and what do we do now? What's this cause? Is what happens in the press and the publications. But it's like, listen, the market went down as expected. It's going to go down about once every 5 years. This is not a surprise. This is like, oh yeah, that's what we kind of planned for, and
right.
we already know what we're going to do when this happens. And now it's still scary, right? It's still, but it's not unexpected, and that really helps us to make better decisions on it.
Right. And realize that it's a phenomenon it's called loss aversion. People don't like losing money. But that can make them make poor investment decisions just because they don't like losing money. So that's why people buy high and sell low, which are exactly the opposite of what you're supposed to do. It's because they don't like losing money. They like losing money. You have to make twice as much to make up for losing. So you have to make $2 to make up for losing $1. So you just have to realize, okay, this is my reptile brain.
That's right.
Kicking into action. It doesn't want me to lose my food store that I'm going to be using, for my reptileness. And start thinking more long term, and that brain that is telling you to do that is not your long term thinking brain, and so you got to kind of change.
That's a super way to maybe wrap up this conversation. Is that reptilian, like this is baked into our DNA, right?
Right.
A million years ago, it was there's a danger, we need to do something, or we're going to get eaten, right?
Right.
And this practice, talking about, I call it the lifeboat drill, as you said, right? It's
right.
What happens when this bad thing happens, so that we can train our logical brain to override our instincts, our do things. And the reality is, no, the best thing to do is have the plan in advance and do nothing. That's completely against human nature.
Right.
Best way for success in the long run. So.
Right. Great. So now is a great time to wrap it up. We always like to talk about 2 different things. First, please subscribe. It helps us with credibility with YouTube. And right. Second, if we both are members of ACP, or the Alliance of Comprehensive Planners, at acp.org.
That's right.
acplanners.org.
acplanners.org.
acplanners.org. It's a group of fee-only financial planners, not-for-profit group, and we all share a lot of the same values. And so if you like the approach that John and I are taking, and you want to find a planner near you that takes the same approach, you can check out that website. So with that, I'll wrap it up. Thanks, John.
All right. Thanks, Bridget.